Welcome everybody. Welcome to the Texas REIAs. We far exceeded our forecast tonight because there's a lot more people than are expected. So we're getting some more chairs for you guys, and sorry for that. We are the Texas REIAs, the largest network of real estate investor associations in the great state of Texas. Over 100,000 members, participants, and attendees going all the way back to 2003. And REIAs, Real Estate Investor Associations, provide resources for real estate investors. Like what kinds of resources? Well, all kinds of resources like market data and training, a community, power teams, money, deals, and pretty much everything you need to invest in real estate. We're going to be providing a lot of that with you guys tonight. And we're actually going to kick things off by sharing with you, first of all, a market update. So we're going to talk about what's going on in the market. I got some of the latest data to tell you about what's going on in the marketplace. And as we kind of get this conversation started, so what's the big story with real estate? What's changed over the last couple of years? What's changed? Interest rates. Interest rates changed. Okay, what happened to interest rates? They went up. They went up. Okay, so they're different than they were before. Got it. Okay, so let's do a little audience participation. There's no right or wrong answer. I'm going to give you two choices, right? One or two. Like, do you think interest rates are high? Do you think interest rates are low? Okay, it's an opinion, so you can't be wrong, but I'd like everybody's participation. So who thinks interest rates are high? Raise your hand if you think interest rates are high. Okay, great. Now, who thinks interest rates are low? Raise your hand if you think interest rates are low. Okay, we didn't all vote. There was only two choices, and you can't be wrong because it's just your opinion. Okay? So try it again. Who thinks interest rates are high? Who thinks interest rates are high? Who thinks interest rates are low? Who thinks interest rates are low? Okay. My opinion, can't be right or wrong, is interest rates are normal. That's what I would call these interest rates. I've been investing in real estate for 20 years. I've got about $30 million worth of houses, mostly here in Austin, and most of them were bought 20 years ago with interest rates between 6.5% and 7.5%. Which is normal by all historical standards. Now, a couple of years ago, interest rates got all the way down to like 3%. Now, before that, when did interest rates last get down to 3%? When did that happen before? That would be never, like ever. It didn't happen in your lifetime, your parents' lifetime, your grandparents' lifetime, your great-great-grandparents' lifetime. Never, okay, had that ever happened like that ever before. Now, when is it going to happen again? I have no idea. I have no idea. My guess, never. In your lifetime, your kid's lifetime, your great-grandkids' lifetime. And the world that would have to happen, for that to happen, you're probably going to be worried more about the zombie apocalypse than you're going to be worried about interest rates, okay? So I doubt you'll ever see anything even like that ever again. But who knows? We don't know. I can't predict the future. But I would say interest rates are normal. And by all historic standards, they are normal. Right now, if you have only been kind of paying attention for the last few years, you're like, oh, they're high, right? Because like a couple of years ago, they were lower, right? So if you're paying attention now, I've been paying attention for a long time, okay? In fact, I bought my very first house. I wasn't an investor then, but I bought my very first house in 1981. Anybody remember what interest rates were in 1981? They got all the way up to 18%. So you guys bellyache at about 7, okay, give me a break. It's compared to 18, money's on sale, okay? Now, interest rates have gone up though, for sure. And I would argue they're normal, that's just an opinion. But I like normal. I like normal. And the reason I like normal, I like to invest in things that are more predictable. Okay, I do both residential and I do commercial. And with commercial, we're typically doing what are called syndications. We buy a property with borrowing some money and borrowing some debt, right, and do something to it and then sell it. Typically, syndications are 5-year deals. So when you sell it, you got to ask yourself the question, like, what are you going to be able to sell it for 5 years from now? That's the question, right? Now, a few years ago, apartment buildings, hyper competitive. So super competitive. So people were, because it was so competitive, people were paying top dollar, right, to buy these things. And they were financing them with 3% mortgages. And you know, even if you paid top dollar, a 3% mortgage, you could get enough rent to pay the mortgage, right? Make a little extra money on top of that. But now, right, they're reselling them because, you know, commercial loans are not 30-year loans. Commercial loans are like 5-year loans. Okay, these deals turn over like every 5 years. So people are selling these properties, and the people buying them, even if they paid as much as the guy bought it before for, you know, at 7%, you're not collecting enough rent to pay the mortgage, so the numbers don't work, and a lot of these deals are going bad, and that's a problem, right? So when interest rates are 3%, and people said, hey, do you want to invest in my deal? I would always ask the question, what are you going to do when interest rates go up to 15%? And they'd say, well, that's not even possible. Well, yeah, it's actually happened before. 3% has never happened before. 15 has happened before, okay? So yes, that can happen again. And I don't know what's going to happen in the future. Nobody does. But, you know, today, when I'm looking at these syndication opportunities, I have to ask myself the question, is it reasonable that 5 years from now, interest rates will probably be 7%, maybe even a little better? Is that a reasonable bet? I'd say that's a reasonable bet. Betting that something's never happened in the history of the humanity is going to continue, that's not a reasonable bet. And that's why I like investing in normal, right? And that's kind of the market we're in. We're in a pretty good market, and it's normal, right? And interest rates are even probably going to go down a little bit, but they're certainly normal by any historical standards. Now, when interest rates go up, what happens to home prices? And again, I'm going to do a question to the audience. There's no right or wrong. It's just your opinion. Okay, so who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go down? Okay, who thinks when interest rates go up, home prices go up? Wow, we got a lot of downs, not many ups. Okay. It does both, interestingly enough. I'm going to share some data with you. Here's the thing about real estate. Real estate doesn't care about interest rates. Real estate doesn't care about the economy. Real estate cares about supply and demand. It's just supply and demand. So only in as much as the economy or interest rates or whatever affects supply and demand does it affect real estate. Now, certainly, when interest rates go up, houses are less affordable. That's true. And because they're less affordable, fewer people can afford them. That's true. And then there's fewer buyers, less demand, and that pushes prices down. Absolutely. But there's a bunch of other things happening at the same time. What else is happening? Well, back in 2002, 3, 4, 5, 6, 7, what happened? We had subprime lending. Some of you might have remembered that. Instead of having to get a loan with credit and job and income, you had to fog a mirror held under your nose to get a loan. That was the loan application process. And then in 2008, all the banks went bankrupt. Okay? So 2002, 3, 4, 5, 6, 7, anybody could get a loan. Everybody could get a loan. So builders are building houses out over the horizon in every direction. And then what did they do with all that inventory? They just gave everybody a loan. I mean, if you could fog a mirror held under your nose, you got a loan, right? So they gave everybody loans, and they built bazillions of homes. And then in 2008, wham, slam, the lenders went bankrupt. Now, well, they were too big to fail, so we bailed them out. But they went back. Lending just stopped. It didn't slow down. It was like a train that hit a wall. So lending just stopped. And there's all these houses, right, as far as the eye can see in every direction, and nobody could get a loan. And then what happened in the market? Crash. The market crashed. Now, eventually the banks got bailed out, and eventually the banks got back into the lending business. Now, all these years later, today, what do you have to do to get a loan? Turn over your firstborn, fill out a 1,900-page application, submit some blood samples, a lot. You have to do a lot to get a loan. Money got cheap, but it never got easy. And consequently, because money never got easy, we're not building, and nor have we been building, enough houses. Who knows this? We're in the middle of a housing shortage. Who's heard this? We have 6 million fewer houses than we have need for houses across the country. We got a big deficit, not enough supply, because everybody needs to live somewhere, right? And when you have a housing shortage, what does that do to prices? Pushes them up. Okay, some other things are happening. What else is happening? Typically, historically, 2/3 of the houses, that are on the MLS for sale are resale, and 1/3 are new construction. That's normal. Right now, it's inverted. Right now, it's 2/3 new construction, 1/3 resale. Why is that? Nobody wants to sell their house. That's why. The economy's not bad. people should be saying, honey, let's go buy a bigger, nicer house. But nobody wants to sell. Why? Because they got those 3% interest rates and they don't want to give it up. Because if they buy the bigger, nicer house, they're going to get the 7% interest rate. And they don't want the 7% interest rate. So all that inventory supply is held off the market. And when you hold that off the market, right, then what happens? You, again, less supply. That forces prices up. And one more thing about interest rates. Why did the Federal Reserve raise interest rates? To battle what? Inflation. Now, I got to tell you about inflation. When I hear people talking about inflation, they always talk about it in derogatory terms. Like inflation is bad, bad inflation, bad, bad inflation. I disagree. Personally, I love inflation. I adore inflation. I just have another name for it. I call it appreciation. Yeah. Because when money becomes worth less, i.e. inflation, what becomes worth more? Everything else. Yes, that's the point. Where do you want your wealth when you have inflation? In stuff. In stuff, gold, real estate, right? Another name for inflation is appreciation. Okay, so when all of your wealth, that's what I am, all of my wealth is in real estate. I don't know about you guys, I did really well these last 3 years. How many of you have owned a house for the last 3 years? Raise your hand. Nice, you're a lot richer than you were 3 years ago, aren't you? Nice. What if you had 20? What if you had 100? What if you had 200? Can't go back, you go forward. Who thinks houses are expensive right now? Raise your hand if you think houses are expensive right now. Okay, now this I totally disagree. Houses are on freaking sale. You're not going to believe how cheap these houses are. Here's what I want you all to do. You know, you're probably thinking like 20 years ago, right? What did it cost to buy a house in Austin? Yeah, most of my houses I paid like $130, $140, $150. Right? I bought a whole bunch of them. We got 30, 40 houses back then. Still own them. Now they're worth like $500,000, $600,000. Most of them are in the city. Nice, nice, right? Now, a lot of people are saying, oh my God, houses are like $600,000 for a house in Austin, like an average house in Austin is $600,000. Okay, here's what I want you to do. I want you to have a conversation with future you. I want to go talk to you 20 years from now, and here's how the conversation's going. You know, do you realize back in 2024 you could buy a house in Austin for less than $1 million, even less than $2 million? I can't believe how cheap houses were. Because whatever you think houses cost today, 20 years from now, they're going to be exactly the same difference as they were 20 years from ago, right? You can't go back 20 years. But when is the best time to plant a tree? 20 years ago. When is the second best time to plant a tree? Yeah, that would be now. Like today would be good. So yeah, interest rates push prices up and they push prices down in different ways. I mean, the obvious thing is unaffordable. That's true, but there's inflation, there's inventory being held off the market. In fact, here's an interesting chart. Interest rates versus home prices going all the way back to 1970. From 1970 to 1981, there it is, interest rates got all the way up to 18%. Crazy, huh? And this little red line down here, this is median home prices. And when interest rates went up, you know what happened to home prices? They actually went up. And when interest rates came down, you know what happened to home prices? They went up some more. And when interest rates went up and down, you know what happened? Home prices kept going up. Now there are bubbles. There's the big bubble. That was that like 8, 9, 10 bubble. There's been other little bubbles and corrections along the way. But you can see there's not the direct correlation between interest rates and home prices, right? It's not like what people think. So you put all that into a blender and I'll show you where we are. Interest rates went way up in 2021, they went way up in 2022, and in 2023, they flattened out. They just went flat, not up, not down, just flat. Now, the volume went down. We're going to talk about the volume, right, year over year. Less buyers for sure, but also less sellers because there's less houses being put on the market. When you have less buyers, right, that pushes prices down. Less sellers pushes prices up. And when you have less of both, prices go flat. So let me dive into the different cities and show you, starting with the Texas roundup. The average house price in the state of Texas is $429,000, down 0.4%. Basically, it's flat. Median price for the state, $345,000, down 0.8%. Basically, it is flat. Now, I think the most important number to keep track of when you're really kind of seeing where the market is and where it's going is this one down here, months of inventory. What is months of inventory? Months of inventory is a statistic, and the way to think about this is if you took all the houses for sale in the MLS, and you didn't add any more houses for sale, okay? The question is, how long before they're all sold out? How long would it last? And the answer is 4.6 months of inventory, which is also the average amount of time that it takes to sell a house. Some more, some less, but the average is 4.6. So that's inventory. Now, the saying is that if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. We are still technically in a seller's market. 4.6 months, that's actually a pretty good market by historical standards. Now, it's not as good as it was a year ago, because a year ago, you can see we had 3.2 months of inventory, which was a pretty darn hot market. But it's not bad, 4.6. Now, going back, historical, 2021 up 18%, 2022 up another 10%, and then 2023, you can see flat, 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 just flattened out flat. Now, let's go into some of the different cities. Houston, average price house in Houston, $432, up 1%, basically flat. Median $345, pretty much just like the state, up 1%, basically flat. Months of inventory, 4.4 months, pretty similar to the state. A couple of other bullet points. Lease prices, average lease prices, up 3.8%. What does that tell you about apartment buildings? Are they full or they're empty? They're pretty full. When prices are going up, it means they're doing well. It means they're full. So historic, 2021 prices went up 16%. 2022 they went up another 10%. 2023 flattened out, just flattened out for the whole year, just flattened out. Dallas, the average price house, second most expensive city in Texas. Average price house $518, flat. Median price $413, flat. Months of inventory 3.7. Dallas is the hottest market in Texas. And I'll tell you something about Dallas. It's interesting. Dallas has always been, I don't know why, Dallas has always been the bellwether of Texas. If you kind of want to know where things are going, you look at Dallas. It's always the first to move. I don't know why. It's just we've been tracking this for 20 years, and that's just always been the case. And Dallas is actually pretty hot, 3.7 months of inventory. Historic 2021, prices went up 20% 1 year. 2022 went up another 15%, and then 2023 flat, up 1%, and we'll call that flat. Okay, so that's Dallas. Lease prices are also up, basically flat, 1%. Okay, let's talk about Austin. Austin is an outlier, and I'm going to explain why. But the average price houses is not a typo, $578,000. The average price house in Austin, holy cow, the most expensive by far city in the great state of Texas. And we did a little research trying to figure this out, and it turns out Austin, you may not be aware of this, it's actually Latin for San Francisco. Yeah. Elon Musk and Meta and Apple and Amazon and everybody has been setting up camp and bringing all the high-tech workers with them and all these people looking for a place to live, and it just drove prices crazy here in Austin. But the prices are down 5%. Median price, what is that, $450, down 6%. Months of inventory, 4.8. It's one of the slower markets in Texas. Not bad, though. It's still a seller's market. But here's what happened in Austin. It all comes down to the year 2021. Because in 2021 in Austin, Texas, the prices went up in 1 year 29.3% in 1 year. And this is where I own most of my real estate, so I was pretty happy about that personally. But not everybody was, because what happened in 2021 is in Austin, Texas in 2021, we had 0.4 months of inventory. less than 2 weeks of inventory. Never saw that before. Holy cow. And what was going on in 2021, for those of you that were not in the market then, somebody put a house for sale in the market, they get 11 offers in a weekend. 1 would win, 10 would lose. So the 10 that lost, they put an offer on a second home, they got 11 offers in a weekend. 1 would win and 10 would lose. So after this happened over and over and over again, people started screaming at their realtor. What is your problem? What do you have to do around here? I need to buy a house. You're giving me bad information. What do I have to, how much do you have to pay to buy a house? And because of that, in the year 2021 in Austin, Texas, something that never happened before happened. It was normal in that abnormal market for people to buy houses at 5 to 10% above appraised value. By the way, the bank will not allow you to buy a house above appraised value, just so you know. The total down payment and the total loan cannot exceed by $1 the appraised value of the house. If you really want to buy a house above the appraised value, you got to put your down payment down, you got to get the loan, and then you got to pull a whole pile of money on top of that after everything else, right? And you can do it, but that's what you have to do. And in that very abnormal year, it became normal for people to buy houses 5 to 10% above appraisal. 2022, things didn't get much better because prices went up another 10%. And then 2023, prices corrected 8%. So if you bought a house in Most in Texas, went up 30% and went flat. If you bought a house in Austin, it went up 40%, came down 10, and it went flat. I don't know. That's perspective. If you bought a house 3 or 4 years ago in Austin, you're the same as anywhere else in Texas. You bought a house 1 year in Austin, it felt like it went down, and it did go down. But that's just perspective. And then there's San Antonio, the most affordable city in Texas, major city. 378 average price, down 2%. Median is 315, down 1%, pretty much flat. 5.2 months of inventory. It's the slowest market in Texas. And 2021 up 16%, 2022 up 12%, 2023 flat or down 2%. So where are things going next? So that's a little bit about where things are. Where are they going next? Well, what's driving the market? Different things are driving the market. The economy overall is not bad. So that's, now real estate doesn't really care about the economy, but when the economy is doing well, people feel better and they're a little more likely to buy real estate. Consumer confidence. How confident are people? This is just people's opinion, and it's scored on a scale of 1 to 200. Right? Anything over 100, people are confident, right? Anything under 100, people are scared, right? Right now the score is 102, slightly over the middle. So we're not scared of recession, we're kind of right in the middle. Unemployment, again, doesn't directly affect real estate, except for if people have jobs, they're a little more likely to buy a house, and it's really solid here in Texas. Anything under 5% is considered pretty much full employment. We have 4% here in Texas. Job growth is good. We're creating a lot of jobs here in Texas, so that's a good thing. Stock market, now, we just had a little correction, didn't we? But in general, the stock market's been doing pretty well. And again, real estate doesn't care about the stock market, except that when people look at their 401ks and it went up the last year, they're like, oh, I'm richer, right? So I'm a little more likely to buy real estate. And then we have interest rates. Interest rates certainly went up, and that drove demand down. So that's pushing prices down. House price trajectory, flat. Not really up or down. Closed sales trajectory is down a little bit. Pending sales, flat. Active listings, flat. We are adding more listings, but we're just kind of keeping up with the demand. Months of inventory, technically we're still in a seller's market. Not a very strong seller's market, but it's still a seller's market. Housing permit trajectory, yes, we're building more houses, but we're just barely maintaining, keeping up with the demand. Migration. Now this bullet should be like a triple-sized bullet. Not all these bullets are the same. Some of these are big things and some are little things. This is a big one. Migration is the ratio of people moving in versus people moving out. So it's change in population. And I got to tell you, Texas has a big migration issue. Okay, last year, 500,000 people left California. Last year, Texas gained 500,000 people. Where do you think they went? Right, pretty obvious, right? And then we got a whole bunch of people, we don't know where they came from, but you know, the point is there's a lot of people that are moving to Texas, and they need a place to live, right? And that's driving demand up. So that's a big up driver. And then we have construction. Let's talk about that for a minute. You know, I got to tell you, contractors are dying, and this is a problem. The average general contractor is like 59 years old, and it keeps going up. And kids are not becoming contractors. So if you have a kid that's like a teenager, here's my advice. Don't send them to college. Buy them a hammer. I'm serious. Make them a contractor. They'll make way more money. They'll be way happier. They won't have to work for some jerk, right? They'll just have a much better life. They'll have no student debt. It's like, it's going to be such a better life for them, right? Do not send them to college. Just buy them a hammer, right? And it's like the contractors make a fortune. I used to be able to build houses for like 100 a foot, 120 a foot, 150 a foot, and then it was like 180 a foot, and then it's like 200 a foot, and it's like 220 a foot, and now sometimes it's like $300 a foot. I mean, it costs a fortune to build anymore, and some of it is materials, but a lot of it is labor. A lot of it is labor. And then I guess there's some wild cards. I hear there's an election going on, and you know, we don't know what's going to happen with some of these wars and further inflation and whatever. So those are the things that are pushing the market up, down, and sideways. Okay, what do you think? Who thinks that prices are probably going to go up? Who thinks prices are probably going to go up? Who thinks prices are probably going to go down? Who thinks prices are probably going to stay about where they are? That's probably where I would say, but I'll give you the forecast. And I don't come up with this forecast, by the way. Most of this data is pulled from Texas A&M School of Real Estate and a number of other sources. And we're not here to, by the way, also push a perspective. Like if you listen to the National Board of Realtors, every year the market's going up. They just have a different reason for why, right? If we think the market's going down, we say we think it's going down. We think it's going up, we say we think it's going up. We're not here to sell you anything or try to persuade you of some particular opinion. We have great strategies to make money in up markets, down markets, and sideways markets. Right? But it is a good idea to be a student of the market because you want to prepare yourself for wherever you think the market is. So here's our forecast. That probably was about the bottom, folks. We don't see much changing. Interest rates are highly expected to change. Probably they're going to start declining in September, and they're probably going to go down by 0.5% by the end of the year. Could be more, could be less, we don't know. You know, it was pushed off, and now they're saying they didn't do it fast enough. I mean, whatever. But this should be a little bit of a juice, a small juice to the business, because some of the stuff is being held off the market because of interest rates. And interest rates dropping can only help make the market stronger. So we expect that sales volume will increase and rebound, and we expect prices will be up about 2%. Not really anything. So if you're expecting some big correction, that was probably it. Hope you found that exciting. We don't see any huge things that would push the market broadly higher or broadly lower. That's the forecast. So I'm going to move on to our next presentation. Any quick questions on that? Was that helpful for you guys? Okay. Yeah.
Is this data for all of Texas you're forecasting or for Austin specifically?
This is all of Texas, yeah. And you know, I showed you a little of the data for each city specific. Austin is one of the slowest cities. Austin has a few little outlier issues. But yeah.